So much, Ravinder, for all that list of stocks. But now we have been joined by Harshad Patwardhan, CIO, Union Mutual Fund. Mr. Patwardhan, welcome to ET Now. You have mentioned before that we are likely past the worst in this cycle. You have seen the launch which has just happened. You have seen the markets the way they are in green. But still, global tensions remain. What is your view?
Hi, good morning, everybody. Thanks for having me on your show. Yes, you're right that we formed. In fact, I will give you a little bit of context. We became cautious on the markets end September, October last year, and we actually gave this call that the worst seems to be over mid-April. We believe that clearly one big risk that was weighing on the markets, as you know, the tensions in the Middle East. At least for now, we believe that we are past the major hump. So we do believe that going forward, markets should do well. We are very constructive on the markets from a medium to long term perspective. In the near term, yes, we need to watch what happens in Middle East, and more importantly, we also need to watch what happens in first, second week of July, when the 90 days exemption that was given by President Trump comes to an end. So I think that is something that in the near term we need to keep an eye on.
Yeah, I second the thought. Tariff war scenarios, trade war, trade scenarios, interest rate decisions, geopolitical concerns, all of it, and the markets are digesting, the domestic markets at least are digesting it well and rationally with a lot of maturity. Harshad, good afternoon. Mansi, this side. It's good to talk to you. Yes, we are likely past the worst in this cycle, and if you see, large cap seems to remain more attractive if we talk about the risk reward ratio. But for people who are considering to create and draw their portfolios for long-term basis, what is your view? What are the key positives and negatives with regards to sector-specific approach, and how is it that one should create their portfolio?
In fact, very recently we have tweaked our view that we held that view for quite some time, that large caps are more attractive compared to mid cap and small cap from a risk reward perspective. But the kind of correction that we witnessed in mid and small cap earlier this year, at the index level, quite substantial, at the stock level, even more so. We believe that a risk reward wise, even mid and small caps can be, definitely looked at. So what we are advising investors at this stage to take exposure to the market through flexi cap kind of schemes. Obviously for a week or two back, we were suggesting that the exposure to the market should be done through an STP because Middle East situation was volatile. We haven't the trade war. It's still there. We don't know the end game there. So gradual exposure to equity is what we are suggesting. And of course, mid and small cap exposure can be better taken, we believe, through a long-term SIP.
Right, but you have also highlighted before about the corporates and banks having a robust balance sheet. I want to understand which metrics actually attracts you more.
So that is in the context of the fact that on a relative basis, if you look around the world, India's macroeconomic fundamentals on a relative basis are probably at their best. I would say, over the last 30 years at least. Uh, it was in that context that I've mentioned that the balance sheet of Government of India has improved quite a lot. Balance sheet of banks, as you know, is robust. We are, the problem that we has not had on NPLs, which peaked in 2018. Things are a lot better now, and corporates in terms of the cash flow generation, debt to equity ratio. So health of India banking system and corporate sector is extremely good. What we now need is some kind of a sugar shot in terms of consumption increasing and in terms of private capex improvement. I think that is something that is the need of the hour for markets to do well sustainably from here.
Okay, so sugar short in terms of consumption. That is a good way to put it, Harshad. And while we are talking about the consumption space, again, with the onset of monsoon, seasonality factor is something which one needs to be considering and also be watchful of. What's your view, diving deep a little more ahead of consumption, your view on agri-related, fertilizer-related plays as well as the seasonality factor on the whole?
Yes, I think to an extent that has already played out. If you look at the way some of the sectors and stocks have moved in monsoon related, I think to an extent that has already played out. What I will be very interested in seeing is, and for that, of course, we will be watching the numbers very closely and also management commentary, is in terms of what happens to urban consumption. As far as rural consumption is concerned, the commentary suggests that that has already started to do well for several months now. Urban consumption has been a problem, which has been pointed out by companies, pretty much across the board. I think the big delta that will come on the consumption side when the urban consumption sentiment improves and people start to spend in urban areas.
All right, thank you so much, Mr. Patwardhan, for joining at this hour. And with this, it's time to take a quick break, but don't go away. We'll discuss market in detail after the break.